India is one market where we are getting very significant growth, and this growth is across the board. A lot of it was consumer till now. Over the next 3 to 5 years, we are seeing a sharp increase in corporate capex. That is the key thematic we want to focus on in India. And if you think about it, what has happened in India is we have had a lot of government capex over years, road building, infrastructure building. Now housing has taken off. The next step, and we have some early signs of it, it is corporate capex. So corporate capex, corporate debt as a percentage of GDP has gone from a bottom of around 50% in 2018 to around 60% now. And it is accelerating. Post-elections, we should see acceleration. So yeah, it's a fantastic thematic. Not a lot of places have that. And Indian banks tend to be generally quite profitable, consistent book value compounding. So yeah, that's a place to be.
So do you think that some of the private banks would benefit more from this sort of pickup in infrastructure lending? And also, what does that mean for asset quality? Because that's been a bit of a challenge in the past with execution risks.
Right. So let's first deal with the asset quality. India has one of the cleanest asset quality today across the board.
Across the Asian region.
So we look at all the 13 markets across Asia Pacific, and because post IBC, the bankruptcy code, and then we had a lot of lawsuits against it and all of that. So we had a body of jurisprudence which got created against around IBC, as a result of which we had every court case kind of got washed through by the tribunal, and we have very clean books now. Consumer credit was a bit of an issue, but it was in very small, sub 50,000, sub 100,000 kind of INR. So that is sorted. Corporate balance sheets are super clean. So asset quality is actually, in my mind, an opportunity, because a lot of banks which have written off a lot of these assets are going to actually recognize over the next couple of years the collateral value that they got as they get sold off. So asset quality, not a problem. That's actually a start, a nice beginning. In terms of execution, I agree. Now, and here I can't overemphasize the IBC. IBC has changed the way the banks have bargaining power versus corporates. Now, if a corporate defaults, banks can they have bargaining power.
And they have the collaterals.
They have the collateral, they can enforce the collateral, they can recognize it and all of that. What it means is, over the next 3 to 5 years, if any corporate borrows, they have to borrow for productive assets. They can't kind of do things which they should not to begin with. So that's a very big shift in terms of bargaining power in favor of banks. And that is where over the next 3 to 5 years, it's not only hugely positive for the corporate lenders, we should get significant PPOP growth with limited provisions, limited credit costs, because most likely these are going to be productive assets, but for the country. The productivity of the economy can be significantly better with this round of capex.